You were told you need to invest, but you don't know how. Well, here's how you should actually start investing. A step-by-step simple guide. I got you. So first, you need to choose a broker. There are lots of brokers out there right now. You may have heard of Charles Schwab, Robinhood, Fidelity. There are more. But the biggest thing that you need to look for when it comes to a broker is to check and make sure they have low fees. Make sure their platform is easy to use and find out what the minimum amount of money that you need to open an account. Make sure the brokers they do allow fractional shares and make sure they allow for retirement accounts. And I'm pretty sure they do. Then you're going to open an account. Are you going to do a taxable account or a non-taxable account? Then you need to fund your account. So many brokers, they allow you to start with small amounts, sometimes as low as $10 or $20. Yes, it's that low. So use the money that you won't need soon because investing is for the long term. Again, use money that you won't need soon because investing is for the long term. I'm pretty sure everyone has $10 or $20. Again, you can get started with that, okay? Then you want to research which stocks you want to buy. So look at the company basics. Find out what the company does, how they make money, and do they have long-term potential. Then you want to decide how many shares you want to buy. If you don't have the money to buy one share, you can purchase a fractional share, and we'll get more into that later on. You don't need to buy a full share to get started. Again, you don't need to buy a full share to get started. A lot of people assume that you need a lot of money to get started, but you don't. Then you want to make your first investment. Are you going to do a market order or a limit order? A market order, you're basically buying the stock or that company at that current price. For the limit order, you're saying, you know what, I want to buy this stock at a specific price. So say for instance, you have a company, maybe their shares is $100, but you would rather buy into that company when it drops to $90, maybe $95, if it does. But it can definitely happen. Then you're going to add your beneficiaries. A lot of people end up adding their beneficiaries like towards the end or even forget about doing so. But I like to do mine ahead of time, because again, what if something happens to you? You want to protect your profits, and especially for retirement accounts. Then you're going to review your portfolio. You're going to review your portfolio, basically everything that you have purchased, on a quarterly or a yearly basis. You don't want to do it on a daily basis. Long-term investors, because that's what you are going to end up being, don't need to check constantly. Then you want to keep investing. Invest on a regular basis. So even small amounts add up over time. Then you want to relax. Just allow your investments to grow. Let time and compounding do the work for you. All right. Now, let's break everything down even further. Step 1, again, choose a broker. So you need to find out, what are your goals? Are you saving for or investing for retirement? Are you trying to get your kids a college savings plan? Are you investing for vacation? What exactly are you investing for? Then find out the type of accounts that their broker offers. So they may offer, again, taxable accounts like your Roth IRA, a IRA, a health savings account. There are different ones out there. So find out what your needs are and then find out if that broker actually offers the account type that you need. Then you're going to make sure that you look to see if that broker offers fractional shares. Now, fractional shares, those are more so if you have say you got one stock, but you don't have enough money to purchase that one stock. Well, you can buy a piece of that stock with a certain amount of money. That's what fractional shares are. Then you want to look for a broker that offers low fees. No one wants to pay, I don't care what it is, no one wants to pay for anything that's with a high amount. You want to make sure that whatever you're looking for and whatever you're trying to buy, that it has low fees. Then you're going to look for tools and resources from that broker. Again, do they have, so for instance, they may offer stocks and ETF research. You may be able to find some stocks and make your own watch list on that platform. You may be able to track your portfolio as well. And you want to also see if that broker, if they offer tutorials or training and whatnot. A lot of these brokers, they do offer this. Then you also want to make sure they have good customer support. Now, obviously, if you're just now setting up an account, you don't know if they offer good customer support. What you can end up doing, you can call them and ask about their products, or you can do what I always do. I love Google reviews. I go on Google reviews all the time and check out everything just to see what the customers are saying about that broker. Then you want to see if their app, whether it's the desktop app or on your mobile phone, is it easy to use? Can you easily navigate through all of the products and the services that that app offers? If it's not easy for you, you might want to find another broker and see if their app is easy for you to maneuver. Then you want to find out what the deposit process looks like. Can you just wire your money? Can you just link your bank account to that broker? There's different ways that you can deposit your money into the broker. So find out exactly what that specific broker that you're looking into, what is their process. Step 2, now you're going to open an account. All right, so you need to, again, decide the type of account you want to open. So is it going to be a brokerage account, a RRA, a 529 college savings plan for your children, a health savings account? There are so many different accounts out here. Find out the type that you want to open. Then you're going to provide your personal information, including your name, your address, your social security number, and your employment details. Yes, they need all this information, okay? Then you want to enter your financial details such as your annual income, your investment experience, and your risk tolerance. These are things they need to know so they can know what level they can put you on and what type of products they can offer to you. Then you want to set up your login credentials, including a username and password, so that you can officially start investing into the stock market. Then you want to review and agree to the terms and conditions. We all know about terms and conditions, but this time read them, okay? A lot of people don't read the terms and conditions. I have been guilty of that. But when it comes to the stock market, things like that, read your terms and conditions when it comes to the broker that you choose. All right, then you're going to submit the application and wait for approval. So a lot of times you get instant approval. Sometimes you have to wait 1 to 2 business days, but most times you get approved the same day. All right, step 3. Now you can fund your account. So decide how much money you want to start with. Choose an amount that you will not need soon, okay? This is long-term money. It's not next month's rent or your mortgage. It's okay to start small. Again, you can start between $10, $20, up to $50. Up to you, especially if your broker allows fractional shares. Then you're going to fund your account by linking a bank account or making an initial deposit. Then make your first transfer from your bank to your broker. Confirm the timing. So some funds, they're usually available instantly. Sometimes it takes a few days to settle, okay? No different than when you deposit money into your bank. All right, then you're going to set up recurring deposits. So pick a schedule. Are you going to deposit on a weekly basis, bi-weekly, or are you going to do it on a monthly basis? Then choose an amount that you're comfortable with. So even if it's small, you can make automated amounts. They support long-term growth, okay? Step 4, you need a research checklist. All right, so the easy thing to do is start with what you know and who you know. So make a list of companies you already use or that you already understand. Right now, I guarantee you every person has a phone. If you have a phone, let's say you have an iPhone, which is Apple. Apple is a company, right? So when I look up Apple, you already know what Apple does. Then again, research that company. So you can always either Google or you can go to Yahoo Finance, type that company name in, and that information will pop up. Go to the company's website. Go to their side, the side that says investors. It may say investors relations sometimes. Either way, click on it and the information for that company will pop up. Or you can go to the broker itself and type in that company name, the company name or the stock name, whatever it is. that you want to research, and their information will pop up as well. All right, so part of that research is you're trying to find out, what does the company do? What's their mission? Are they trying to solve a real problem? What type of products are they serving? Are they creating demand? The best way to find this information is to look at their company website. All right, revenue. So, is the company making money? That's the biggest thing right there. This shows how well the company sells its products or services. You can find that information on the income statement. Only thing that you need to worry about when you look at that income statement for the revenue is, are they making money? Is the money going up? Will they lose the money? Is the money going down? Or is the money not really moving, just going sideways and whatnot? Look for green, baby. You want to see positive signs. You don't want to see anything negative. That's the only thing that you really have to look up when it comes to the revenue. Is the company going up? Is it going down? Then, is the company making profits? What is their net income? Are they making money after they pay their bills? This is the company's real take-home money. So again, you want to look at the income statement for that. All you need to see is the profit going up on an annual basis or on a quarterly basis, or is the company, are they losing money on a quarterly basis or annual basis? Is it going up? Is it going down? Don't make it hard for you. Again, let's look at the income statement. Then you're going to look at their expenses. Are the expenses rising faster than what they're able to bring in? If costs explode but sales don't, that's a problem. Look on the income statement for that as well. All right, find out if they got cash on hand. Does the company have a healthy amount of cash? Look at their balance sheet. When you look at their balance sheet, you will see, hey, is it positive? Is it going up? Is it going down? No different than your own money. Do you got cash on hand? Do they got cash on hand to be able to pay their short-term bills or to be able to invest in the company more? Is the company in debt? Does the company have a lot of debt? Do they have a little debt? Is the debt growing faster than they're making sales? Look at that on the balance sheet, okay? Everyone knows what debt is. Then you want to look for red flags. Look for constant negative news. And sometimes you can look for positive news, but for this case, look for constant negative news, because high risk doesn't always mean bad, but beginners should be cautious. All you got to do is look at Google reviews. Just look at, I said Google reviews, just Google, and you'll see news that comes out about that company and see what's going on with the company. Then you're going to create a small watch list. Just pick 3 to 5 stocks or how many you want that you feel comfortable starting with, okay? All right, step 5. So now you're going to decide how many shares you want to buy. So set a dollar budget per investment, right? So you can say, I will invest $25 into stock A instead of saying I'll buy 3 shares. This helps you stay within your comfort zone and manage your risk. And the reason I say that instead of saying I'll buy 3 shares, because suppose the stock price is not at the price that you need for it to be. You may not have the money for it just yet. So just say instead, you know what, I just invest $25. That makes you feel better, you know. Again, it makes you stay within your comfort zone. Then you can check the current price and fractional options. If price is high and the funds are limited, like I just mentioned, use the fractional share options. Example, you can buy $10 worth of this stock instead of saying, you know what, I'm not going to buy anything at all. Then you want to calculate your position size. So, if buying full shares, I would buy 1 share at around this price. If you're going to buy a fractional share, just say I would invest a certain amount of money into this stock and just ignore the amount of shares. Then you're going to double check diversification. So avoid putting all your funds into a single stock at the beginning. So consider starting with a broad fund like an ETF where you can get a lot of stocks all in one basket, plus maybe 1 to 2 individual stocks. So you never want to put all your all your eggs in one basket. Y'all know how that saying right there goes. Just make sure you have like your stocks is diversified, or your portfolio, should I say, is diversified. All right, so step 6, you've done your research and everything, right? So now you're going to make your first investment. So you're going to choose what you're buying. Select the stock or the fund from your watch list. So as an example, you may see a ticker symbol. A ticker symbol is just a nickname for the company that you want. So for example, AAPL, that's the ticker symbol for Apple. Then you want to choose the order type. So are you going to buy that stock at market order or at the current available price? Or are you going to buy that stock at a limit order? You're going to buy the stock at the price you're willing to pay. Then you want to enter the quantity or the dollar amount. Again, if you're buying full shares, just enter the number of shares you want to buy. If you're buying fractional shares, just enter the dollar amount that you want to buy. Then you're going to review your order. You're going to check to make sure it's a buy or a sell, whatever you're trying to do. But right now, we're trying to buy right now, okay? Make sure the ticker symbol is correct. And make sure the order type, whether you're doing a market or a limit, is correct. If it's a limit order, just verify your limit price. Alright, once you do that, then you're going to submit and confirm your order. Place the order. Once filled, you are now officially, you own that stock, okay? That means you're an investor, baby. Alright, step 7. I talked about it earlier. Add beneficiaries. Find the beneficiary section. Go to account settings or profile in your broker. Look for beneficiaries or account beneficiaries, especially for IRAs and retirement accounts. You need to decide who should receive the assets. Your primary beneficiary. The first in line is going to be your spouse, your child, a family member. Then get your contingent beneficiaries. These are backup individuals if your primary beneficiaries can't receive your assets. Then gather their details. The information you're going to need their full name, the date of birth, their relationship to you, and their social security number or their address. Depends on the broker. Then you're going to assign percentages. So for example, are you going to give your spouse 100%? Or child 1, 50%, child 2, 50%, maybe your spouse 50% and child 1, 50%. Either way, you need to ensure that the total adds up to 100%. Then you're going to review and update over time. So always revisit your beneficiaries when your life changes. Maybe you got married, divorced, had children, maybe there's a loss of a beneficiary, you never know. But either way, you want to keep it current so it always reflects your wishes. Step 8, you're going to review your portfolio. So just set a review schedule. So if you're going to do long term, you're going to check it quarterly or every 3 months or yearly, just depends on you. But avoid daily checking and reacting to short term price swings because there's going to be a lot of noise out here and you're going to might get scared. Like, oh, I need to go ahead and sell my stock. Don't do it. You're doing it for the long term, okay? Then during each review, ask these key questions. How have my investments done overall? And does it still match my time horizon and my risk comfort? Then make sure you're looking for your problem areas. A single stock now makes up too much of your portfolio, or an investment no longer fits your original reason for buying. Maybe the company changed, maybe your strategy changes. Things happen. So just make sure that you look for problem areas. But only adjust when necessary. So consider adding more to broad funds for stability or trimming down a position that has become too large a percentage of your portfolio. But just stay focused on your long-term plan and not short-term noise. Step 9, keep investing. I can't say this enough. Keep investing. Choose an investment schedule. Example, are you going to invest $50 every month? Or you're going to do $25 every paycheck. Just make it realistic so you can stick to it, okay? Then decide if you're going to automate deposits if possible. Set up automatic transfers from your bank to your brokerage. Now it's optional, but some brokers do allow auto investments into specific funds. Then you want to practice dollar cost averaging. That's your friend. That means you can invest the same dollar amount at regular intervals regardless of the price. So as an example, if this particular stock is $200, right? You don't have to get $200 to buy that one share. If you want every time, every paycheck, you can only invest maybe $20. Then keep doing it until it equals up to $200 at one point, and you're able to get that one share now. So the effect of that, you buy more shares when prices are low, and fewer when prices are high, which is going to smooth out your costs over time. All right, then at a certain point, you can start increasing your contributions when you can. So maybe after a raise or when a bill ends, you can bump up your monthly investing amount. Small increases, they do add up significantly over years. Sometimes over months, to be honest with you, okay? All right, step 10. Now you're going to relax. You're going to remember your time horizon. Think in years or decades. Do not think in days or weeks. Remind yourself that short-term drops are normal and expected. It is the stock market. Prices are going to go up and down, but you have to remember that I'm in it for the long run and I am trying to build wealth, okay? Then avoid emotional reactions. It happens, but you're going to resist panic selling during market dips. Your focus, do my long-term reasons, your original reasons for investing still hold, rather than what did the market do today? Again, the market is going to always fluctuate, okay? But you want to give compounding time to work. So allow your dividends and your growth to build on themselves over time. So just reinvest your earnings where possible to accelerate compounding. Again, reinvest your earnings. I'm not telling you what to do, but this is what I think you should do. When you're making, as your money is making money, then you can keep investing those earnings and you're making more and more and more money. Do not try to take out that money, ahead of time, okay? Then you're going to use your review schedule as your anchor. So check in on a quarterly basis or a yearly basis, but not every time the market moves. In between reviews, live your life and just let your plan run. All right, so I'm going to recap and give you the action steps. Step 1, open a brokerage account. All right, find a broker, open that brokerage account. Step 2, you're going to fund it with any amount, even $25. Then you're going to choose one company or one ETF. Then you're going to buy your first share. And step 5, just relax. You're officially an investor. So just remember that you do not need to know everything. You just need to start, because there's a lot in the stock market, but just starting out, you don't need to know a lot. Your main thing right now is, how do I get started, okay? All right, so if you like what you heard, go ahead and hit the like button and subscribe to the channel, because there will be more videos I have coming. And share this if you liked it as well, okay? With that being said, I'm going to put it back to my lovely face. Anyway, I hope y'all enjoyed this. And just know that I am not a financial advisor. I am not a financial expert. I'm just one of those people. I'm not afraid to get started. All right. Even if I don't know what I'm doing, I'm going to go ahead and get started. When I tell you that it's not hard to start investing, a lot of people are just scared because they haven't had anyone explain it to them, or maybe they need their hands held. But either way, just get started. You will not regret it. I promise you. With that being said, thank you for listening to me. And again, like, subscribe, and share the information. I'll see you next time. Bye.